Hello and welcome to Pro Trader Strategies Market Commentary for Friday, March the 31st. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters, don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. So let's get that out of the way and get on with it. Bit of economic data coming out today. In Europe, we had German retail sales coming in better than expected and 1.8% higher than the expected 0.7%. So, and then in Great Britain we had nationwide HPI came in slightly lower than expected at negative 0.3%, was expected to be a positive 0.3%. French consumer spending came in lower than expected at 0.8%, was expected to be 0.3%. French CPI came in at 0.6%, was expected to be 0.7%. So CPI is Consumer Price Index, not really moving up that much there. Then we had German unemployment change came in better than expected at a pullback or a negative 30,000 versus expected negative 10,000, showing that it looks like more people are being hired there. So that being a negative number is good. And then we had the final GDP for Great Britain come in right in line with expectation at 0.7%. And revised business investment came in at negative 0.9. It was expected to be negative 0.1, negative 1, I should say. And then European CPI flash estimate, which is actually the one that is more widely looked at over there. Our flash CPI is not as widely looked at as it is overseas. But anyway, it came in at 1.5%, expected to be 1.8%, a little bit less than expected there. And core consumer price index flash estimate came in at 0.7, expected to be 0.8. Then here in the United States, we got core PCE, which is personal consumption expenditures price index, came in line with expectations at 0.2%, and personal income came in line with expectation at 0.4%. Personal spending slightly pulled back a little bit at 0.1%, was expected to be 0.2%. We also had a couple of Fed governors speaking. We had Dudley speaking and Kashikari speaking earlier this morning. Then on to they didn't really say a whole lot, so not a whole lot to be said there. Then Chicago PMI, which is Purchasing Managers Index, came in slightly better than expected at 57.7, expected to be 57.2. University of Michigan's consumer sentiment pulled back a little bit at 96.9, was expected to be 97.8. So a little bit lower than expected there, not really that great. So, but all in all, mixed bag there, not really coming much out of line than what was expected, so nothing to really fret on that front. We do have oil coming off just slightly today. Can't get through this 23 fib level. I think it's going to start to pull back, as I've been talking about for a while now. We did get this better than expected bounce. I didn't really know that it was going to, or think it was going to go up there and test that before coming back down, but I do still see it wanting to come back off a little bit. So we have a record amount of oil out there, and nobody has shut off the spigots. So I can see this continuing to go down right to this $46 a barrel area in the next couple of months anyway. So I am still bearish on oil. Then gold futures holding tough on this 9-day moving average. You guys, yesterday came down, settled right on it. Today we did break overnight down through that level, but is now back above there, and we opened right on it, but it kind of came back, broke below it for a minute, and is now back above it. Really close to having this 50-day moving average cross over the 200-day moving average, which from a chartist perspective is more of a bullish sentiment. So keep your eyes out for that happening. Could happen in the next few days, probably maybe next week or so, next Friday probably, if the market continues to push higher like this. Onto the bonds, down just slightly on the day and holding tough on that 50-day moving average, right at the volume point of control where the most time and volume has been spent over the last 52 weeks. That's going to be the spot. I think that we are going to see this kind of trickle sideways. It's priced in for the Fed hikes and don't really see anything other than maybe a major pullback in the stock market in order to get this bond market really kind of moving around a whole lot. Then onto the equities, we've got a real mixed bag here. You know, we got NASDAQ up, we've got the Dow down here, as we can see. The NASDAQ down, the Dow Jones Industrial Average down about 26 points, let's call it. Then on to the NASDAQ, yesterday making a new historical high, but today slightly in positive territory by about 8 ticks right now. Then on to the E-mini S&Ps, unchanged right now as we speak. Is slightly lower than where the market opened, but at the end of the day, it is unchanged for all intents and purposes. And again, just showing that mixed bag of Dow's down, NASDAQ's up, equities unchanged, bonds are pretty unchanged. You know, everybody kind of seeming to be wait and see. We also have with the E-mini S&Ps an inside day, as you can see, that both value area high and low are inside of yesterday's value area high and low. Good opportunity for day traders to get in and out of this kind of trade if you're playing off of the market profile. I've gone over this in different webinars. Don't really have enough time to really trade that, but this is a good opportunity for that, where you're trading on yesterday's value area high and low, and you can kind of play that. So inside days can be fun for that. Albeit most people will say that that's a boring day. Well, as a trader's perspective, it lines up pretty nicely for some good scalping. All right, with USO, this is what I was talking about with the crude oil. I think crude oil is going to come back off. USO is the ETF for the oil fund. I think that we're going to see this come back off a little bit, so I decided to put on a bearish trade in here and went into the March and bought the 11.5 puts and then sold the 9.5 puts to create that put spread. It's a long put spread. You're paying a debit for it, but I was able to pay only about 99 cents for that. That fits right inside my rules, 50% the width of those strikes. If I can get a bit of a pullback for it to come back down and at least test that value area low, it'll be looking pretty good. And the support that it should find is right around here. Not looking to get the full breadth of that spread at this point, but I could easily see it. If it pops down here, it's going to want to go down and test this little support level right here, which is right there in line with my 9.5 put. So looking for a little bit of a pullback in USO and crude oil. If crude oil pulls back, then we'll see that pullback in USO as well. Right? So that's about all I've done today so far. Getting ready for the webinar today. We're going to be doing laddered puts and correlated products. So it's going to be a way to hedge different correlated products using puts. So we've had a bit of a pullback. If the market gets moving higher, this is a good, especially if you have a bullish assumption strategy to put on in a bullish assumption, but you're not really sure which one is going to make that move, but you're kind of thinking that this sector is ready to move higher. That's going to be the time to put a trade on like this. All right, so that's all I got for you guys today. Go to protraderstrategies.com and sign up for that. If you can't take that, take it easy.